Gareth Soloway, Chief Market Strategist at InTheMoneyStocks, is back to break down Wall Street Bets trading madness. Gareth, welcome back.
Hey, thank you so much for having me back, David.
I do mean madness in the best sense of the term. This is an exciting time for everybody. Even if you're not participating in the markets, it's just interesting to observe. A lot of different facets we'll talk about, not just the trading side, but the regulatory side, things we've never seen before. So I think we're going to have a very, very interesting discussion. First question, Gareth, are you a user on WSB?
No, I'm not.
Are you, as they would call, an autist?
Yeah, I'm not part of that group, but I have to say it is impressive, and I congratulate them for doing what they've done. Do I agree that GameStop should be up here? No, but I'm just one participant in a market, and a free market is a bunch of people that disagree, and then price figures it out, and price is right. That's the bottom line. I've always said that to my traders. Price is where the market is. That's what it tells you.
At what point over the last week were you first aware of the GME rumors? I had a friend message me about a week ago. He said, take a look at Reddit GME. I didn't, to be honest, I didn't pay much attention. It was still at, $80 something. I thought, okay, I took a look. All right. People were talking about it. And then the next day shot up to 120 and then 145 and then 362. And now it's, we're back down and then 270. I don't know. Okay. So what happened there?
So this is where the Wall Street Bets group started to really get notoriety. And if you look at what's been reported in terms of how many people were joining, I mean, you literally went from last week, I don't know, maybe 1.5 million, 2 million people, literally over the course of days, millions joined more. And when you have that many people jumping in, even if they have small accounts, if they're joining the party, it's going to cause a stock of the market cap size of GME to just shoot to the moon. And that's exactly what happened. So, I mean, I did read that something like, it jumped from like under 2 million to over 4 million users on Wall Street Bets in a matter of days.
There was a particular reason they targeted GME, right? It had a bunch of shorts accumulated. That was one of the reasons I read.
Yeah, I mean, I think that's the main reason. I think part of it is, there's so many gamers in the world too. A lot of us that are in our 20s or 30s, we remember GameStop as being kind of the place to go. Nowadays, it's not as much, but, it had that kind of, back in our olden days type feel, plus the short, 140% of the float short. That's definitely something that the regulators have to figure out. I think anyone should be able to short a stock, but it should go up to 100%. If there's 1 million shares in a company, you can have 1 million longs and 1 million shorts, and that's where it should end. Okay,
walk us through the charts, Gareth. We've spoken a couple of times, so I have a sense of how you read charts. If I didn't tell you the backstory of that chart, you're looking at that, you'd probably be shorting it, right?
Yeah. So, I mean, first of all, if I saw this chart, I would assume they cured cancer. I really would. I mean, there's no other way to go about it. Having said that, you have to, when you get in these type of market environments, you have to realize that technicals don't matter anymore. Fundamentals don't matter anymore. And as a trader, you have to recognize that and just stand back. So let's be fair. I have a tiny position short GME right now, of average of around 345. And now because I said that, probably I'll get squeezed out to 500 and cover it. But literally it's 60 shares. I mean, it's not the end of the world, for what I make on a daily basis trading. It's just more, I want to be able to tell my grandkids I participated in this stock at least a little bit.
But why aren't you participating in the long side? Why aren't you joining the revolution, right? This is what I read. They want to overthrow the establishment. They want to stick it up to the big guys who've looked down on the retail traders the whole time. They want to stay long, hold the line.
I applaud that. But at my heart of hearts, if I could turn back time and go back a week, I would absolutely buy it. And I'd buy a lot more than 60 shares. I'd buy tens of thousands of shares. But at this point, I can't do that. It's at a point where, it's just my personal thing. I'm a trader in a market of traders, and just looking for a little pullback here. I'm in the money $15. Maybe I'll take that $15, make a little bit of money.
Let's just look at the technicals there. It's hit some sort of resistance around the $400 level. I don't even know if the word resistance is applicable here. I think that word is lost. I think that word has lost meaning in the last week. But anyway, it seems to me it's reached $400 resistance level. So what happens if it breaks above that level?
So I mean, right, as a technical trader, there's always a little thesis behind what I do, right? So basically, yesterday we saw this high of 483, I think it was. That's my break point. So as long as it stays below there, I'm looking at that as a potential top in the stock, and I'll ride it. If it pushes up above that, then I admit I'm wrong, and I will exit that trade. So there's a technical level behind it, and it absolutely does seem to have resistance. Today, it seems to be at that 400 level as it's hovering right around that 330. One thing crazy about this is GME for the last couple hours has been in a $30 range. That is almost unheard of. This stock is basically consolidating here. Now, the question is, will it break up or break down? And that's the big one.
Have you looked at the put call ratio on this one?
Yeah, there's just tons of calls. I mean, tons and tons of calls. So it's ridiculous.
Okay.
But the one thing I would say here is that, going back, we were talking about regulation and all that kind of stuff. And it's important to understand that, you don't want the government to come in here and say, oh, we have to protect the little guy. And this is one of the things I just want to make a point about. It's a strong point of mine. In markets, you have two sides to every trade, right? And you can't go in and say, well, these investors don't know what they're doing. We all are making that commitment when we go into the market that we may lose. And it could be either way. It could be shorts losing or longs losing. But you have to be able to understand that that's part of the market. So these regulators let the markets be free markets. I said this on Twitter, and I'll say it again here, is that at age 18, you can open a brokerage account and put money in it. If at age 18, you can go and join the military and potentially die for this country, then you should be able to do what you want with your money. And the fact that Robinhood has the gall, or any of these other brokers, to say, oh, you guys can't buy this, when you could go and join the military and potentially sacrifice your life, that is nonsense. Your money, your decision.
Do you think there was maybe a political incentive behind restricting the long trades? First of all, let's recap what happened. So a bunch of brokers, not just Robinhood, bunch of brokers restricted long positions on a few stocks like GME, for example. So traders were forced to stop out. Now, I've seen interviews of the CEO of Robinhood a few times, and reporters have asked him, "Why did you do this? Why do you think they did this?"
Oh man! So first off, what's crazy about this is that if hedge funds needed to get bailed out, they got bailed out yesterday. The stock went from $480 down to $112. So, any hedge fund that was in and getting crushed at 150 or 200, they got bailed out yesterday. And what annoys me is that by restricting the ability to buy from all these brokers that, 99% of the retail investors are in, they basically sealed the fate that it was going to collapse. Because if you take the buyers away from a stock, only that you have sellers left over. So I don't know if there was ulterior motives here or not. There needs to be investigations. But when you stop buyers from buying a stock, you're guaranteeing it's going to fall, which if you have hedge funds short, that's exactly what they want.
Yeah. Okay. So a couple of things here. First of all, is this restriction even legal?
Yes. All right. So, I mean, just like you go into, if I walked into a restaurant and I wasn't wearing the proper attire, they can ask me to leave. I mean, brokers are allowed to decide that. Do I think it's right? Do I think it's ethical? No, because the hedge funds could buy and sell as much as they wanted in this whole mess. They don't get those restrictions. So it's not right. But people have the option to say, okay, I'm going to go find a broker that allows me to do what I want when I want. Yeah. Now, the one thing the broker does have the ability to do is if you're using margin, you're borrowing money from them, they could say, okay, you can't trade GME on margin, which is what my broker said. And I just had to use cash. But at least they're allowing me to do that with cash. It's my cash, like I said, my decision.
I agree with you, Gareth. I think brokers should be allowed to do whatever they think is worth, whatever they think is right. They're a private business after all. I think that if a trader doesn't like what they're doing, they're free to take their business elsewhere. Here's the problem though, Gareth. It's not just one broker doing this. It's pretty much everybody on the street. I think that becomes a problem. It looks to me like there's some sort of collusion going on. I don't know if that's even legal.
You're right. And it should be investigated. I hope that the politicians take it to heart and they look at all these things, because you're right. Yesterday, I couldn't, believe it or not, through my brokers, I couldn't short or buy GME either. So, I mean, it was literally every broker. I run a chat room with hundreds of members in it. None of them could trade GME yesterday. So it was everyone, which again, guarantees the stock was going to fall. I mean, and then today it's back up again because people can buy through Robinhood and through my broker and so forth. So you have to look at this thing. I agree there could be some stuff that needs to be ironed out. Maybe there needs to be a new rule that dictates that the average investor can buy and sell any stock a hedge fund can. I would love to see that type of thing. Everything should be on a fair playing field. That's the way the markets are meant to be. It's what free markets are meant to be.
But how are you still placing positions? Which brokerage out there hasn't put restrictions on GME yet?
Well, I know as of today, Robinhood said that they were allowing some trades in GME. Okay. I have Merrill Edge myself. I was allowed to short a little GME today, but they said that it had to be in cash, so it has to be using the cash in your account. You can't use margin.
Yeah.
So I haven't tried a lot of other brokers, but there are a few that enabled it today, which again is why the stock's up today. I mean, once you allow the public that wants to buy this thing to get in, then the stock goes right back up. No surprise there, right?
There's a class action lawsuit against Robinhood. People who have trusted the platform now are saying that they are no longer trusting the platform to act in their best interest. Has this event shifted your perceptions of online brokers at all?
To be honest, it's not the first time it's happened. So, I mean, let's be honest. I've traded for a long time. I mean, the late 90s was a type of environment much like now with .coms. I know a lot of people on Robinhood weren't trading back then. I mean, this was 20 years ago plus. But back then you had .coms going from a penny to $1 to $5 to $10, literally in a day or two. So, I mean, there's always been that. But it's always been unfair. And the regulators, the politicians, they need to put this on a level playing field because the Robinhooders and Wall Street bets are dead on. You know, they have a right to run a stock up. They should be able to pay any price they want for a stock and do what they want. Hedge funds have, for years, if not a decade, even 100 years, have gotten together in a room and they've conspired to say, okay, let's all buy this stock and run it up. And then who buys at the end? The small investor. They dump it into them. I mean, this has been going on for ages, and it needs to just be a level playing field.
Yeah. Okay. So let's go back to the trade here. Now, if I had to trade, if someone put a gun to my head and said, David, you have to trade $10,000 GME, how would I do it? What are the positions? What are the stops? What are the levels?
All right. So the level very clearly. All right. And listen. Could it go higher? Yes. But for me, I am short. I'm going to give you my exact trade. I'm in at 345 and change, 60 shares short. The way I'm trading it is basically using the high from yesterday as my stop price. If price gets above that, I'll exit. That's my easy stop to go on. Again, 60 shares doesn't put me at much risk. Downside target is going to be at minimum gap fill down here at $194. So $194 target to the downside for me. And again, stop is going to be at this 483 level from yesterday's high.
I'm a little disappointed you didn't say all in on call options on one chain. All in or nothing, Gareth.
Can I just explain one thing about call options that the average investor needs to be very careful about? Please. Is the crazier a stock gets, the bigger premium the institutions are charging you to buy. Remember, this is a rigged game. Options are a rigged game. The institutions charge you a big premium on stocks like this, where the only way by expiration you make money is, on GME, it's probably like $100, meaning that the stock at the end of the month or at the end of the week has to close massively lower on puts or massively higher on calls. They're doing it so that they don't lose money, folks. That's the way options work. So be really careful about those premiums. That's why on a stock like GME, if you can short it or go long, do that. Don't trade the options because the premiums are insane.
What if you sell the options? What if you sell options then? Wouldn't you make a lot of premium?
Yes. But again, there's a lot of risk there. If you buy calls or puts, the max you're going to lose is what you invest. If you're selling and the stock goes in the opposite direction massively, you could be on the hook for a huge amount of money.
That's if you're naked, right? You'd have to cover it.
Right. So if I bought call option, if I sold calls, I'd probably want to buy the stock to protect myself.
Yeah. Okay. Now there's a bunch of option strategies that are popular on Wall Street Bets. Just to name off the top of my head: box spreads, butterfly spreads. Things I read about in school that I didn't think people would actually use, but apparently they do. What do you think of these strategies? Do you use them yourself?
To be honest, I don't. I do a little bit of options playing around for fun, but for the most part, and this is the kicker, folks. I mean, once you get to a certain size account, you don't really have to do the options anymore, unless you're protecting a position. So that's where I am at my trading career. When I was younger, I played around more, but I honestly was mostly buying calls and buying puts, just kind of swinging for the fences.
What do you think is the biggest difference between trading options and just trading the underlying stock?
I mean, the answer is leverage, right? So options give you the ability on small amounts of money to make a ton of money. The difference is anytime you can make a lot of money, you can often lose a lot of money. So I've had options that I bought all the time that'll expire worthless. And, that's why I only put a tiny amount of money in them, but they can. When I'm in the underlying stock, especially if you're long, I mean, you could be down a little bit and then 2 years later, it could go in the money and make you a ton of money. That's okay. With options, they expire worthless a lot of the time. So you have to just be aware of those risks.
How high do you think GME could go?
Wow. I mean, if it broke that 480 to 500 level, it wouldn't shock me to see it over 500, over 1,000. It honestly wouldn't. Again,
I think at this point, nothing would shock anyone anymore.
Nothing at all. I mean, it's remarkable. It is absolutely remarkable. And again, I applaud the Wall Street Bets people and smaller investors for being heard. And I think at this point, Wall Street is going to have to take them seriously and take the average investor a lot more seriously. And that's a good thing.
What's interesting is that GameStop was a company that was on the decline. I think my favorite meme out of all of this, I've seen a bunch of them. My favorite meme is Blockbuster saying, hey, Reddit, we're here now. Do your thing with us.
Yep. So David, I just posted this on Twitter before that blows my mind. And I said it rivals the Loch Ness Monster and Bigfoot. Where the heck is GME's CEO raising $2 billion in capital to save the company from going out of business? I mean, literally, he could raise $2 billion with the click of a button right now at this stock price. And we're not hearing a word. It's insane. I mean, that literally, like you said, GameStop is hemorrhaging money. They're in these strip malls. No one's going in there because of of COVID. I mean, I don't know. It's got to be like Bigfoot or the Loch Ness Monster.
Yeah. What do you mean by that analogy? I'm curious.
Like just that it's like this mystery, this like thing that should be there and everyone hears about it and he's not doing it. It's like, did you see him? Did you not? I don't know what's going on here.
Let's talk about AMC real quick. Let's take a look at the price chart pattern here. Okay. So real quick now, Gareth, how would you be trading this?
Oh my Lord. Man, you're bringing the hard questions today, huh? So I am not in GME. I haven't traded it at all since this craziness began.
You mean AMC?
Going to stock. AMC, yes, excuse me, AMC. Basically, you would use the high pivot from $20 as your break point. If you go long, that's your upside target. If you go short, that's your stopping level. At some point, I would think that this comes down to about the $5 level. Just going to one thing that concerned me for AMC's future is that, we just heard from J&J today that this new COVID vaccine was only 66% effective when you're looking at the whole world, which means the new variants. It also makes me concerned about the current vaccines out there. What's their efficacy ratio? And does AMC have a future if every year we're dealing with new variants that may or may not infect us? And so be a little careful with AMC. I hope we go back to normal. I pray we do, but be careful.
Okay, I've had a few guests over the last 48 hours comment on what's going on in the markets. The first guest, I asked him whether or not what's happening now with AMC, GME, these stocks could happen with Bitcoin, in the sense that we've got a bunch of people just crowding into the space and we're seeing volatility in the order of 60, 70% corrections up and down in one day. I haven't seen that in Bitcoin, which is ironic because usually Bitcoin has supposedly a higher volatility profile than some of these stocks on a normal day.
Well, Bitcoin has its own DNA of volatility. And the DNA of volatility, when we look at Bitcoin, is more like Tesla. An incredible volatile stock. The DNA of volatility for gold or the S&P 500 is 1% on a daily basis. That means 70% of the time it's a non-event to go up or down 1%. For Bitcoin, it's plus or minus 5%.
What do you think?
Yes, it could happen. It's a lot harder. Like actually on Wall Street Bets, they were talking silver up quite a bit and silver stocks. A lot of silver stocks with high short percentages ripped higher. Silver has gone up. But the problem with silver is it's a lot bigger. If you look at all the silver in the world, it's a lot more money than the market cap of GME. So, as a trader, I know this is that it's a lot harder to push something that's massive. So now that you have a $500+ billion market cap on Bitcoin, yes, it can be pushed, but it takes a lot more money to push it the extent of a GME type move.
Okay.
And that's just basically, that's a market cap issue.
I spoke to a guest right before you this morning, and we talked exactly about that. The silver short squeeze. They want to squeeze it all the way up to $1,000 an ounce. I asked him, look, if they had to do it, how would they do it? And the answer, I think his answer, if I could sum it up, is basically it's not really practically possible right at this point. It's a theoretical exercise, but it's not.
Now, as far as silver goes, they indicated that they were trying to short squeeze silver. Much more difficult to do because here we're talking about the big global banks involved in the market, and the metals will trade on supply demand fundamentals and.
Yeah, you're 100% right, David. As you get these bigger market caps, I mean, it's like, could we squeeze Apple up to $1,000 company in a week or two? And at $2.5 trillion market cap, it's extremely hard, especially for the average investor, right? So, I mean, even if you combine millions of people with $10,000, that's going to be really hard to do. So I agree that $1,000 is probably not going to happen, at least in the near term.
Okay, Gareth, let's just hypothetical exercise again. Someone forced you, right? Someone put a gun to your head and said, Gareth, you have to orchestrate the biggest short squeeze in the history of the silver market and mankind. You have to make the Hunt brothers look like they didn't know what they were doing. How would you do it? You had every single resource at your disposal, every single line of communication at your disposal in the world.
I would. If I could do anything, I would say that every currency in the world has to be backed by silver.
Right.
That doesn't.
Okay.
If you bring it back to a silver standard on or a gold standard on every currency in the world, then you'll get there. Can I just make one more comment, David, on something that I just want people to understand?
Yeah, please.
All right. So we're looking at crazy markets right now. I mean, you have the stock market coming in hard. You have stocks like GME ripping. This all goes back to the Federal Reserve, all right? And I was so annoyed at Jerome Powell on Wednesday when he said, the bubble in the market, the bubble in these stocks has nothing to do with us. It's about the vaccine and about the stimulus from the federal government. The Federal Reserve has been pushing money into the market since 2009, nonstop. And this is the result. You're going to get craziness like this, and they're creating another massive bubble that at some point will collapse. So be careful, people. Understand the real root cause of this. The Fed, as I think I said this to you at some point, the Fed will ultimately be blamed for the next big collapse, and honestly, they probably should be.
Next big collapse of what exactly, Gareth?
Just the whole system. I mean, at this point, you're going to see the stocks collapse. I mean, you think 2009 was bad. My estimation is you'll see another 60-70% drop in the markets at some point over the next few years when this all comes tumbling down, when interest rates spike because inflation spikes, which is inevitable with the amount of printing of money. I mean, at some point, something is going to break, and the system is built on a house of cards, and it will come in hard, including housing prices and everything else. I think gold and Bitcoin are probably your best bets for safety in the long term.
Including GME, Gareth?
I mean, if the dang CEO would just raise capital, maybe.
Yeah. Let me just ask you one final question before we wrap up. Just if you came from Mars, you had no idea what's going on right now. You weren't reading Wall Street Bets, you weren't reading Reddit. You're an alien just observing the stock market. Do you think that $300 a share for GME is a fair valuation for the company? I know that's a ridiculous question, but let's say you had to justify it. Could you?
No, honestly, I couldn't.
Okay, so there's no way to justify this.
The only way you can justify it is if you make every other stock out there. Like, all right, so basically GME is close to the market cap of Best Buy. And if you look at Best Buy's revenue and earnings, then Best Buy needs to be $1,000 stock. That's the way you justify it. I mean, you just have to, you have to compare apples to apples. And that's the only way that this justifies it, which, my logical mind, that's why I'm short 60 measly shares,
Yeah. All right. Okay. Well, good luck with your trades, Gareth. And I do mean that in the best sense of the word. I'd like to hear an update from you soon once some of this wraps up, and we'll see what happens. Thank you very much for coming in.
Thank you, David. It was so much fun. Thanks again. Have a great day.
Yeah, thank you. Thank you for watching Kitco News. Stay tuned.